Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, December the 10th, the year 2018. Let's talk trading. Size! Many times, traders make the mistake of trading with a size that's just a little too much for them to handle. And if they're not careful, that size can wipe them out. This screen comes up, money and risk management, and it talks about position size. But, rules are made to be broken, of course. And every now and then, there's an opportunity where you can press it, or you keep adding to the position so you can make bigger and bigger gains. But it's a double-edged sword because you know how fast the market can move against you. And you know how sometimes the market can wiggle you out of a good trade only because the size was such that maybe you said, "Oh, I better not take that. I better, take the money off the table because I had 10 and now it's down to 5 and I don't want it to go down to 1, so I'm going to take the money and the next thing you know it goes up to 20 or more. And then you're kicking yourself." So what do you do? Well, let's say your size is just 2 micro lots. That's what you're willing to risk, you know, or that's the position size that works for this or this. In other words, you have your risk, your stop loss, and you get, 0.02. That's what you trade. Well, if you put in your order 0.02, when you exit, you will be exiting 0.02. But what if you put in 2 orders for 0.01? And so maybe you take profit, a small profit with the 1, move your stop loss up to break even or break even plus 1 or plus 0.5, and then let that other one ride. I've talked about this before, but it's so easy to forget these things that are so simple to do. And maybe if you had your trading plan written down or use the My Notes indicator like what I use right here, the My Notes indicator, you could put this on a screen. You see right there. It's just notes. Some people say it's the best indicator I wrote. And I wouldn't debate it because it could be a great tool, especially if that tool makes a difference between profit and loss, that you put a reminder on the screen so you know what to do. So it might be a simple reminder, hey, if I'm at 0.02, then I'm going to put in 2.01 trades. So just remember that. And here we go, monthly. Yesterday, we were right around the midpoint. As you can see here, we're a previous midpoint. And actually, the current midpoint, you can see we're just a few pips above it. We're 31 pips below the previous midpoint. And if we look at the weekly, you can see green week almost hit the upper wick zone of the previous week. And we filled the gap. Now, remember last night, I showed you there was a handful. Now we just have 2 pairs that haven't filled the gap. So I guess there's still a couple opportunities out there. And you can see here, we're right there on the border of the lower wick zone. We left it earlier and shot way up, but now it hit 92, price has pulled back 41 pips off that high. And if you drop down to the daily, you can see right here, and you can see there's only 76 pips. Would you look at the pound New Zealand, the new beast as I call it, 411 pip range. 317 off the high, 94 pips off the low. There was a lot of British pound news going on. So you can see that was a heck of a trade. And even dollar Canadian popped in at 112, 99 off the low. So it looks like it went through 134 and then came back. So it might be a short opportunity later this week there. But we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pairs over 100 pips in range. Current daily high minus current daily low. Buy zone trade, we already talked about this in the video from yesterday. Nice trigger there. And you can see here, came across the open and right back up through it. A nice pro trade to pick up there. And just a couple of pips under the VWAP, the volume weighted average price. I just stuck that on there because some people like to trade with it. And so I made that as an option. And the rats, the red rats feasted. Green rats are now getting their due. You see this big candle and this big candle? Remember, price has a tendency to want to go back to the open of big candles. Like you see this big candle here? You see that open price? Do you see how price came back to it? Now, it took a while, but for some strange reason, I am noticing this. Like you see this big candle here? Yeah, price came back to that open. You see this big candle here? Price came back to that open. So it's almost like chasing opens. Maybe that sounds like a good title for a video, Chasing Opens. But, that's part of the highest open, lowest open method that I came up with. Okay, we took out the weekly pivot, and I believe yesterday when I made the video, I said, no, I said the monthly pivot. I said, look to take out the monthly pivot, I believe. But we also here, you see, we came back from the open to the pivot, to the monthly pivot, came back, and now we're heading back towards that monthly pivot. Daily, we still have 2 missed. Okay, the 3-level ZZ semaphore indicator, 2 ball at the bottom. We showed that yesterday. And it just continued till we got a 1 ball at the top. Remember, pro traders only, or experienced traders. I say pro because it's quicker to say than experienced. But what you want to do is the people who aren't experienced, you want to wait to the next one. So you take your short here. But these guys would take it right on that bar, just like here. But here you can see you waited short. 2 ball appeared. Green at the line, once again, a profitable trade. And people will call that hairy hindsight, but that's okay. You can see there was a bunch of buying going on. Lots of buying ticks. Price, candle color, price at the line, going with the cross. Sometimes you get a little, sometimes you get a lot. Sometimes you have to scratch the trade. And we're entering the upper wick zone right here. You see we left it because I know, guys, it's a broken record. Price enters the zone, it leaves the zone. It enters the zone, it leaves the zone. It enters the zone, it leaves the zone. It enters the zone. It just happens every day. You can take advantage of it, or you could just, just watch it and do what you do. But many traders want to know what to do. I tell them, if you like trading near the open, buy zone. If you like waiting and do reversal trades or breakouts, wick zone. It's that simple. Here we have the holo. You see it dip down in that holo zone and it came right back up. Good for many pips. I think I need to put the, maybe update this for next year and put the pip distance on those and label them. But I wrote this in 2016. Okay, the inventory retracement bars. And you can see the long triggers are here, the short triggers are there, so no action on that. One of my favorite trading screens, there was a long trigger here, a short trigger there, a long trigger, another long trigger, and a short. So you can play it both ways. Unlike if you want to do a rat, because remember, Yale students got beat by the rat. And you can see here what happens when the bid crossed above the valley of the ask, and we just had a nice movement up. Now we've got the ask crossing below the peak of the bid, and we had some downward motion. Not much, but just some. Einstein line. You can see, opened up the charts here, long trigger, about 10 pips to the good. Oh, and I remember yesterday I was talking about a new indicator that I was been experimenting with. But before I show you, you can see here using the wick zones how price is moving in and out of wick zones. So right here, you can see here where price is moving, and it shows you which candle from the back and where these targets are, or where the levels are. So once again, this big bar looking for price to come back here. It may or may not. Frequency range on the hour, over the last 120 hours. Once again, you know, the odds are going to be, it's going to be 19 pips or less for the range. So you get these big bars, they kind of stick out like a sore thumb, very like over 30, only about 6.67% of the time. So you just don't look for them. And when you get them, go ahead and take profit. Okay, here's the screen. Okay, what I did was, this was the high, this was day one for the month. And then this here is day one for the week. So you see here, we've got a little overlap. And what I'm looking for is just how price reacts around the first day of the month and then the first day of the week. You know, so tomorrow it'll be interesting to see where this box is and see how price acts at these levels. Because think, this is the first day of the month. If price crosses through that high, actually if it crosses through the open, now we've got a green month, and then it just go on to make new highs. On the other hand, you see this is the low of the month. You saw what happened here. This was the first day, ended somewhere around here, and then the second day. Actually, what I should probably do is just highlight just that one shade, just that section for the day. But I kind of like having it all the way. I'll figure it out, maybe make it an option. So the whole idea here is, once again, these levels might prove to be very interesting as we go forward. And the inside bar was one day ago, and you see there was a nice explosion to the upside. Hopefully somebody took advantage of it. So remember, keep your size reasonable. Break up your trade so you can take some profit and then let some ride. But remember, no matter what, it's not what you trade, it's how you trade it. So go out there and drain the banks.